there are two things that are very, very important in the stock market. One, what will you buy? Which scrip will you buy? And number two, when will you buy? When will you buy? When will you sell? The first part is about choosing a scrip. The second part is about timing your entry and exit. Now tell me. So the comfort level with you is a little more in case the stock market prices collapse if you are holding a good company share. If you buy a terrible share and then the stock market collapses, chances are it may not even be worth the paper on which it is printed. Earning per share. You take the net profit of the company divided by the number of shares, you will arrive at the earning per share. And if you compare that with the market price of that share, you will arrive at the price earning ratio. Imagine this. To decide what to buy, I suggest look at data of this kind, and I'll give you a few criteria which I feel you should apply before you decide whether or not to buy those shares. Criteria number one, when you look at this data, and this data is not only available, you will find that today the price is here. A few days later, you might find the price has jumped up here. The next day it might have come here. The next day it would have gone there, and then it has come down, and then it has gone up. And you start wondering, the stock market is a crazy place. It doesn't know whether it is coming or going. It can't seem to make up its mind whether I should go up or I should come down. But you watch it for a long enough time, and you will suddenly find, so mentally he says even 50 is okay, but 70 is too high. It goes up to 80. Then it goes up to 90. By the time it touches 90, this fellow says, you know, every day that I have delayed my buying decision, I have lost an opportunity to make profit. If I have made mistakes in the past, let me learn somewhere around here. He is convinced enough to pick up the phone and tell his broker, you know, will you buy for me? Because he's been seeing all his friends making profit except himself. He was not impressed by the shop floor performance of this company. He was impressed by the stock market performance of this company. What's the fault of the stock market? Whose fault is it then? It's the investor's fault. But he says, what's my fault? Am I not supposed to get impressed if the price goes up? Are you suggesting that I start buying when prices are falling? How can I buy shares where the prices are falling? And the answer is, please don't buy when the prices are falling. Do buy the shares when the prices are rising.